Hello everyone, good morning. So for today's video, I thought let me review ICT's commentary that he did a couple of days ago. So when we watch the entire 21 minutes video, it all looks perfect, that he marked the exact fair value gaps or inverse gaps where the market reacted. Okay. And he showed all the major assets and everything had some reactions from these gaps. But by the end of this video, if you just watch it, you don't learn anything. And all you learn is, okay, there are gaps, there are inverse gaps, and price will sweep liquidity. So that is all general concept that you know already. Okay. So what really this video teaches you? So I mark the same things on my chart, and there is a pattern that emerges, right? And that's what I will take you guys through because ICT is never going to teach you the exact rules for why he marks these gaps or why he observes these gaps. Okay. So there's a simple solution to it. So let's go back to our chart and see it. So first is US dollar index. So he marks this bearish gap and then we inverse it, and then the consequent encroachment of this is where you get a buy. Okay. Now if you go back and learn what is CE consequent encroachment, as per Hopi Plaka, it is nothing but 50% of the gap between the main GB levels. Okay. So the major uh, GB level, sorry, CE times or CE levels that you see are 14, 23, even 707. Let me write it here. And then 35 and so on. But we will only focus on these four numbers because we are looking at a daily chart. So on a daily chart, there's only 30 days or 31 days in a month, right? So we won't get any other numbers. Okay. Now, when we look at all the gaps that he marks, they are formed on these dates. Okay. And he explains the consequent encroachment topic using these gaps. Now, if I look at this gap was formed on the 23rd of Jan. Okay, is it a CE number? Yes. So once we break above the 50% or break above this gap, this act as a support, and then this 50% will be very sensitive for push higher. Okay. Now, when I look at this gap, this was created between 7th of April till the 8th of April. Is 7 a CE time or a number? Yes. So same concept was used. Once we break above, use that gap to push higher. Okay. So this is DXY. Next we come to Euro USD. So Euro USD, he marks this gap. So this was formed on the 9th of Feb. So earlier to that we have 6. So here obviously the 7th and 8th were weekend. So it didn't print. But this is the first 7 gap that you see here. Right. Again he marks that, breaks. So once the price goes into that, we fall. Here he marks 27th Feb, which is 27 plus 2 is 29. Okay. So by now you know 29th Feb is 29 is a number that stops the price. So here we have an order block created on that day. So price stops there. Then he marks this gap, which is the 14th of May. Again, it's a CE number. So price hits the consequent encroachment and drops. So GBP USD, he marks this gap. Again, this is 27, 28 or 30th Jan, which is 29. Okay, so this is not a CE number, but this is where algo will stop right on this day. Then he marks this bullish fair value gap and then we invert it. This is the 23rd of Jan. Okay. Then he marks this 14th of May where price, again it's a CE number. 8th of April. So he could have marked both of them 7 and 8 because they are both plus or minus 1 of this CE number. Okay. So you see the pattern here, right? So you're learning something now. You're not randomly thinking, okay, this gap provided. So next time when you come back to test this, you're only focusing on these 4 gaps. Then he goes into crude oil. So crude oil's gap that he marked is 23rd. This is 22nd of May, and then we jump to 26. So this is our CE timed gap. Okay. And price reacts at the 50%. Then we go S&P. So again 6th of May. So 7 is this order block, so no gap. So he uses the 6th gap. Then we have here 21st, 22nd of May. Okay. After that there was a weekend, and I guess 26. So 22nd is again a CE time. So he marks this. In Q he marks this gap, which is 12th and 15th. So we know 14 is a CE number. So that is the gap that he's focusing on. On Bitcoin, so here we have a 13th gap, which is again 14. Here he uses 1st of May. So that was the end, like the 29th of April. So we discussed 29, 30s is what you're going to get uh, like an end of the path, right? So if it is in support, which means we are going to continue higher. If you even you can deploy addition here, 1 plus 5 is 6, which is again the CE timed gap. Okay. So now almost 7 markets we analyzed, and this video is not going to take 21 minutes, and I'm not going to rant about other stuff, right? I'm going to speak only to the point, and all that you learn is every time you look for these gaps, CE time gaps, now you can go back in history and check where the same kind of signatures happened. So here the gap that reacted is a 14th November gap. Consequent encroachment hit, we dropped. So here 3rd of November you can do 3 plus 11, 14, or even here. Obviously I'm cherry picking like where it reacted, because I'm not going to analyze every gap, right? But whichever gap reacted or whichever gap ICT marks, they most likely will be uh, using the CE numbers. Okay, so here 8th of May, which is 7, and you can see how the 50% of this is very sensitive. And we can go back. Obviously BTC is not a good, let's look at Euro USD, and we can go back even before ICT, right? So maybe say we'll go 1980s. I don't know when we started printing nice candles for this Euro USD. Okay, somewhere around 86. So if there is an algorithm, then we should see the same signatures, right? So here we had an FVG. So you can see this is 5th, or since there was no 7 here, so it used this time to print the first gap. Then there was this 31. So 30, 31 are end of the paths. That's where the market stops. Here there was no gap. Again 31. 14th Jan. It's a C number. 26th of May. So it could be 21 or 22 when we subtract or add. We can make it 30, 31. So somewhere around there. Okay. 15th of June, which is, there was no 14 here, so it used 15 to fall. 18th of August, It's actually a FVG number, which is 17, but let's not talk about it because ICT didn't mark those numbers. Here, 7th of October, right? So this was all before ICT, but still the market behaved in the same way. Again, 14th and 15th of Jan, creating this gap. And the consequent encroachment, I'm sure, would have hit. Right, so you get my point. So the learning from this is, it is not that you have to depend on a mentor to figure out the exact reactions that you can expect. It is not 100% strategy at all. Like, I'm not saying every time you see a gap, it's going to likely to react, but it is a high probability. Like here, 24th is a 23. So if you are bullish, this is where you should be looking to buy on a daily chart. Okay. Again, between 6 and 9, we don't have 7, but you can see this area being very sensitive. Okay, pretty easy, right? So once you watch this video, this 21-minute video makes a lot of sense from ICT. Otherwise, you'll always be thinking, okay, how this guy figures out the exact gaps that will react. Now, the same concept can work even on 1 minute or any PO3 time frames. So if I open a 27-minute, the same things will happen. Okay, which gap is likely to protect? So this is 11th June, which is 11 plus 6 is 17. So you can use that logic. This is 14th June, 23rd hour, right? So 23 is CE time. So actually I used date here. I should have used the hours or minutes, or addition of it or subtraction of it. So here 36 is a perfect CE number, reacts. Again, 1136 is a perfect CE number, reacts. If you want to go into 1 minute, it's going to work the same. Okay, but obviously you'll have too many options. Day chart will not have those many options. Again, a 1635 gap, protecting the longs. Somewhere here 24, 25. It's not a clear gap, but on a 1 minute there will definitely be too much noise. Okay, so next time when you analyze your daily chart, focus on these 4 gaps. Okay, once they are inverted, use the consequent encroachment to get in. Okay, so the idea of this Discord is to make every other concept available. We look into that in terms of Goldbach, algo paths, or the normal GB levels or GB numbers. Okay, and I believe that GB is a universal concept that can be used to explain any other technology, I mean any other strategies. Okay, so instead of learning everything else, if you focus only on GB and see why these gaps work, why these order blocks work, why this liquidity is important, why did the price stop here, then you get your answer at just one place, right? You're not trying to spend money everywhere and trying to amass all the knowledge. Okay? All you need is Goldbach. That's the underlining that I want to do before closing this video. Okay. All right. Thank you. Hope this helps, and thank you for all the support. Take care. Bye bye.